All right, so welcome everyone. One more episode of Weekly Wrap. स्पेशली बिकॉज आई थिंक जो वॉलिटिलिटी चली आ रही थी, जो एक डर घबराहट मार्केट में माहौल बना हुआ था, एट द सेम टाइम मार्केट ऊपर जाता जा रहा था, वो कुछ हद तक खत्म हुआ. पंकज सर, आई थिंक मार्केट्स हैव बीन हैप्पी ऑल्दो लास्ट वीक वाज वेरी डिफिकल्ट, but it looks like we are happy now. VIX has somewhat come down and markets are back near all-time highs. So what happened there, sir?
So hi, good evening, Vishu. I think what we have seen in the market is that a big relief rally, and which is why Nifty has made a new high and is consolidating at those higher levels. Good part is that the small cap index gained 4% this week and has also made a new high. And also, like you highlighted, VIX is down some 58% from the election day results.
Yeah.
And even in this week, it's down about 22%. And I think overall, what is coming out clearly is the market breadth has substantially improved. So you had about 55 or 51% stocks which were trading above 50-day exponential moving average. Now that base has expanded to nearly 88%. So the market breadth has quite a lot of improved. And I think what is driving this market higher is the confidence what we are getting that the policy continuity is going to be there. Because when you look at the crucial portfolio allocation, the likes of road, railways, I think you're continuing with the same set of ministers. So that is the biggest chunk where the overall capex goes. So, for example, if you're doing a capex of say 9.5 lakh crores last year or FY24, 50% was going in road and railways. So you're retaining the key ministries, including finance. So, which is giving optimism to the market that things are going to remain or the way they have been prior to election, and this growth or capex-led template is going to be there. And also one perspective is that probably with VIX sort of coming down and domestic inflows being good, the FIs have also sort of taken a slightly back seat. So you're not seeing that intensity of selling from FIs. Now, next week is a sort of a truncated week. So our expectation is that the markets could consolidate at higher levels. But in general, from now onwards, I think crucial things which needs to be watched out for is the budget, because that will tell us the element of populism which might come in. And overall, our sense is that things are going to remain good for the markets. And from here on, earnings is what is going to drive the markets.
Right, sir. Right. Sir, I think US Fed meeting also happened this week. How much of that meeting had an impact on our markets?
So yes, I think while the inflation looks marginally down, but I think there's a bit of a disappointment you see, because at the beginning of this year, there was a hope that we'll get 3 rate cuts. And now with this latest Fed meeting, what is coming out is that probably we'll have only 1 rate cut this year, because US Fed has also sort of revised their inflation projection from say 2.6% for this year to 2.8 odd percent. And we are at about 3.3%. But good part is that as we are sort of nearing to that, the FI's flow will start sort of keep becoming slightly better, if not the intensity of selling what we are seeing. So from that perspective, it is relatively things are getting incrementally positive, not a big positive.
Right, right, sir. And how about the same thing in India, sir? How is our inflation looking like now?
So compared to US, we are in a far more better shape. So inflation headline numbers was 4.75%. So it does not look like much of a downtick. But when you sort of look at excluding vegetables, because we all know that in summer season, a lot of heat wave was there, and that sort of disrupted supplies for some of the vegetables. So if you sort of exclude that, the inflation was 3.2%. And I think what we are sensing is that it is about time the RBI is going to probably change their stance on the liquidity. So from withdrawal of liquidity to a neutral stance. And what they also highlighted is that, see, you look at our inflation for projection for FY25 is 4.5%. We have a repo rate at 6.5%. So you have a real positive rate of 2%. What RBI is clearly saying that 1 to 1.5 is what is ideal real rate, which means that it gives a window of cut of nearly a 0.5% to 1% kind of a overall cut. what market is looking at is that probably while Fed will have only one rate cut, we might have a rate cut in the tune of 0.5% to 75 bips, which is good for us because that is going to sort of help, especially the banking and financial services sector, because this is one sector which has really not been doing so well in terms of price performance.
Right, right. Sir, getting into the sectors a little bit, I think cement sector is back at it again. A lot of acquisitions happening. I think last year also there was a lot of movement just because of acquisitions, and again this has started. So what's happening there, sir?
Oh yes, so M&As are back in cement sector. I think cement sector, though the numbers last quarter were not so great, but with policy continuity, cement is also going to be a sector which is going to be a beneficiary. And we have seen one announcement of M&A happening. So Ambuja, known for its aggressiveness because they are sitting on a cash pile of 24,000 plus crores. So they recently acquired 100% stake in Penna Cement, which is an Andhra-based company which has got a capacity of say about 10 million tons, expanding to 14 million tons, and they can further expand to about 17 million tons. And what it does is that while this acquisition is at 10,400, it helps the Ambuja to sort of go or increase their capacity to 89 million tons. And eventually, their target is to take this capacity to 140 million tons through both organic as well as in an organic route. Now, one of the things that one needs to watch out in M&A is the kind of acquisition cost what you pay. And this is in line with whatever recent M&As we have seen. So we have seen Ultratech acquiring Keswaram at similar valuations. Then we have Sanghi being acquired at 100 million tons, or even this company has been acquired at 79 million, $79 per ton. And this is good because when you look at the replacement cost is somewhere about $120 per ton. So this acquisition is definitely positive for Ambuja because it gives a foothold to them in the southern region. Plus, it is beneficial for ACC because a lot of inter-unit transfers can happen. So ACC we are particularly liking more because it is valuation-wise comfort. I think one more rub-off of this is going to happen is that a lot of smaller companies which are trading at cheaper valuations, and we've been sort of recommending some of these names. So, for example, you have a company called Sagar Cement, which is trading at $56, or Orient Cement, which is at $75, or Birla Corporation, which we had recently recommended at $84 per ton. So, there is a potential for re-rating in some of these counters as well. So, M&A being back in cement definitely lights up the entire outlook for cement as a pack.
Right, right. So next up, what I want to ask about is hospitals and how this sector has been doing. I think we had a very in-depth report come out recently from our house. So what happened there, sir?
So I think, see, premiumization is one thing which is being talked about, and consumption is also a lever within that. Or within consumption, premiumization is one lever which is being talked about. Now, a lot of people are focusing on FMCG as a pack. Our sense is that hospitals are sort of a compulsory consumption, and ideally they are slightly better placed. And why we say this is that when we look at last 4 years, I mean this is one sector which has grown their top line by 15%, much higher than the FMCG. The ARPOB or the rates what you charge has gone up by 10%. Plus the bed addition is only 5%. The EBITDA growth has been about 27%. And our sense is that this sector is going to add capacities in the range of 35 to 40%. So all this double digit growth is here to stay. And one part also is that, see, the insurance leg is also sort of witnessing or helping because now the penetration is a lot more better or getting better. So that is also helping. And on top of it, since we can do surgeries at a fraction of a cost what it happens globally, so medical tourism is another factor which can help this sector. So we feel that hospitals are a good structural play for the next 10, 15 years. And which is why I think if Apollo corrects at from current levels, it looks attractive, or healthcare global or shall be at current prices look attractive to us.
Right. So next up, my question is about the stock that has caught the fancy of investors for a while now. For the last 3-4 years, it has been one of the most favorite stock across retail, which is Tata Motors. And I think we had analyst day at Tata Motors, and I would love to hear the insights from there.
So yes, this company has been the darling in the auto sector space for quite some time. I think the stock has run up, so which is why we have a hold rating on this. But what is coming out clearly is the intensity on the overall capex what this company is going to maintain. So one, they are demerging their CV business, which should be largely complete by July next year. So next 1 year, it should happen. And there they're talking of a capex of 2 to 4% of the top line. And while they're also talking of strong double-digit margins, CV is one space historically has been witnessing very thin margins, but now you're talking of a good double-digit margins. That is one a big positive. And they're talking of 5-6% kind of a growth. Plus, there is a good pipeline on the EV side. What they're looking at, so they're looking at EV buses plus EV LCVs, and which is why that capex is required. On the PV side, they are even more bullish. So they're looking to increase their market share, say from 14% to 20% next 5-6 years down the line. And for that, they'll be spending nearly 16 to 18,000 crore kind of a capex, and introducing products across multiple price points plus technologies also. So from that perspective, this is one company which is guiding for good growth in both PV as well as CV segments. And since the stock has sort of run up, which is why we have a hold rating on the stock, but I think any kind of a dip, if it happens, should be a good buying opportunity.
Right, sir. So getting back to the sectors bit, I think Insurance Regulatory and Development Authority of India also came up with some new guidelines, which are holders are happy for it. And because I think some surrender charges have been lowered, but how would it impact the insurance companies from here on?
So yes, I think insurance industry has been one sector which is seeing a lot of regulatory action. So I think what the regulator is trying to do is that while entry looks easier when you're sort of buying a policy, the exit looks very difficult, and which is what the regulator is trying to sort of improve upon. So while they have clearly mentioned some of the changes, say for example, one mandatory policy to sort of enhance liquidity by offering loans, then you are extending the free lookup period. And then what you're also saying is that the company should provide a simplified customer information sheet. Now, on top of it, what the regulator has come up with is that going forward, the insurer should provide an exit because what happens that if you're surrendering the policy, the kind of charges what is being levied is quite high. So, which is where the regulator has come up with. Now, the exact impact is still not known because companies are also sort of tweaking their business model. So there is a expectation that, or some of the companies have been saying that the hit on the margins could be about 100 bits. But what the companies are also doing is that they are sort of expanding the commission period. So, for example, if they were getting upfront commission, that is sort of getting spread out over the next 2-3 years. But overall, definitely what is clear is that there will be some impact, and which is why we don't see some of these life insurance companies doing well in terms of price performance. The way we are liking hospitals, I think health insurance is sort of a slightly better segment looking to us. And Star Health is looking attractive to us because this is one company which is guiding for maintaining margins plus industry leading growth, and valuations look attractive. So, which is why we are liking health insurance as a space more, and in Star Health, particularly with a target price of 650.
Right. Awesome, sir. And sir, of course, our final segment, what will be the weekly hidden gem of the week from you, sir?
So, not much of a surprise. Cement is something which is, and I just highlighted that Sagar is one company which is trading at quite a discount compared to whatever M&As you are seeing. And this is one company which has literally doubled their capacity in the last 2-3 years. So from 5.8 billion tons, they did about 10.5 million tons. Last year, the volume growth for them was quite good at 14%. What they're guiding is again a good volume growth of 18%. The challenge was on the EBITDA side, so it witnessed an improvement from FY23 to FY24 levels. But our sense is that going forward, that is going to further improve. So this is one company which is going to witness improvement in the performance. And since they were sitting on a lot of debt, probably some land monetization is also what we are expecting. Because the debt levels for this company had gone up to nearly 1,400 odd crores, and which is what is expected to keep coming down going forward. So this is one company which we are liking because of the sheer valuation, and mind you, it's Andhra-based player, so we have already seen action in that particular market, not only from the central government, but our sense is that even the state government is going to be a lot more active in terms of the building of a new state capital. So that will require a good amount of capex, and obviously demand for cement is going to be there. So which is why Sagar Cement with a target price of 305.
Awesome. Awesome. This was amazing, sir. Thank you so much for your time again. We'll be back next week with Pankaj Pandey, sir, to learn more about markets and navigate these tough times or easy times now that volatilities have reduced. Thank you so much again, sir.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.